Hey everyone, very good morning. Charles here, 6:21, Monday the 13th of July, 2026. Hope you're all doing well. The chat is pretty quiet, but I hope that you guys are able to gain some benefit from the early, well, not so much the early calls, but most certainly having the recording available first thing when you open your chart. So hopefully that's being beneficial for you all. Yeah, and without any further ado, we'll get straight into the charts ahead. I feel like this week could well indeed be a strong week based on what I can see thus far on the DXY and how the DXY is respecting not only our higher time frame points of interest by way of refined daily and 4 hour order blocks, but more so the 15. And I love to see that kind of performance because it means that we can be very intricate with our confluence on DXY. Once we then see that DXY confluence straight to the cross pairs that we are identifying our structures and setups and then looking to execute. So I'm currently short a position already, US dollar CAD this morning. Again, as a result of just being active on the charts earlier, in order to produce the breakdown for you guys, it's allowing me to, I guess, have more of an opportunity, to be honest, but it's not actively executing positions blindly. And I'll talk you through that now. So the DXY higher time frame. No confluence based on the weekly time frame in terms of looking for short positions, but it's the daily that's really the giveaway. And if you guys were able to have a look at or have a watch of most recent breakdowns, particularly yesterday's, we were looking at the daily time frame. So although we are higher time frame, of course, weekly time frame, potentially bullish towards the upside. Of course, what goes up must come down. And in addition to that, higher highs followed by higher lows, followed by higher high continuation. So that's the most basic principle form of price action structure. So once we can identify a higher high, particularly on the higher time frame, then it's down to us to seek to understand, well, when can the higher low look to be created? When we can trade that higher low or identify that higher low on the DXY, then in terms of our cross pairs, or even for today, US dollar CAD short for me, I'm simply using the confluence that the DXY is looking to weaken. So of course that converses nicely for US dollar weakening, and then we can look to short the US dollar, or I'd alternatively take a long position based on the weakness of the US dollar, and that would be a long position on the cross pairs such as GU, EU, and AU for good example. So there we are. This daily candle is really what started the party. It's the only daily order block that was available as a result of that bearish engulfing candle that took out a couple of days worth of price action. And with that said, hey Frank, very good morning to you. Hope you're doing well. I figured to start a couple of minutes earlier. Usually people aren't joining this early, but it's better for me to get the recordings out for everyone first thing early mornings now, and then everyone is able to view them before London Open. But how are you anyway? If you're able to unmute, feel free to join me as we go through the breakdown. But very, very glad to see you join there, Frank. So we're on to the daily time frame at the moment and just explain the reasoning why I've used that order block. So it's the only order block available. That's not the only reason why. It is a bearish engulfing candle that caused that order block, which then allowed us to use that as an order block selection. And just before you join there, Frank, I was explaining on the weekly time frame, we can identify a higher high. Therefore, our next port of action is to seek to identify that higher low. There's nothing by way of order block on the weekly time frame. However, this daily candle is our giveaway, and that's allowed us to seek to manipulate that daily order block. So we're currently in and around that daily order block. So currently, predominantly, I'm looking for short positions out of that daily order block, and then hopefully then we can refine that position down. So I've just explained there, Frank, why I've taken a US dollar CAD short first thing this morning. So onto the 4 hour time frame. As I've said previously in the breakdown, usually one line will do it. So we've got a couple ports of call in terms of actions here. Here, of course, is where the most recent high was created on the 4 hour time frame. That's our higher time frame outlook. So we've got a higher high, potential anywhere could be that higher low for that higher high continuation. Where's my screen's gone? There we go. higher high continuation. However, in the immediacy, in terms of intricate breaks of structure, it's then down to us to seek to understand when we would be ready to understand where a break of structure has occurred. So here's our first potential break of structure that could have been in the market. However, if we weren't comfortable using this area here as a break of structure, and we have this area here as a break of structure, because at some point we have to understand that although higher time frame, we cannot break structure to the downside until this area has been broken. In the immediacy as intraday price action traders, we must start to understand when that break of structure has occurred. And I'm getting that more so by way of the EMA. So the EMA has now been broken. Now, why is that of any importance? Because price was respecting that EMA. Price came down towards it here. We rejected it. Price came down towards it again. We rejected it. Then as a result of this move towards the lows, I'm now confirming that we have now broken the EMA close below it as a clue, and we've left an order block behind. So of course, we're looking for price to return back up to that refined 4-hour order block and then look for the rollover to the downside once that order block has been refined. So in the immediacy now on the 15-minute time frame, we had another order block where price was looking to come in and respect. And I don't know why it's got missing from my 4-hour chart, but here we go. There we have it. So again, this 4-hour order block, I hear everyone ask, well, why do you select that particular 4-hour order block? Again, usually one line would do it, and that's how I'm trying to teach moving forward. So again, if we had a low in the market, we have now, so here was the low, and we can now clearly see that price has made a lower low, breaking, or rather with a candle closing below where a candle is failing to close below before. So the port of action is low, lower high, lower low has been created. We roll ourselves back to identify where we can seek a order block that has created that break of structure, and we have now returned back into that order block. So the first thing I was looking to do straight out of the bat is refine this order block down, because the 4-hour order block is far too large for me to seek to trade from. Therefore, once we refine that down, here we are, 15 minutes. And if I enlarge this for us nicely so we can have a look and move it to the left-hand side, we can now understand price action and structure even clearer on the 15-minute, just so we're aligning with everything. So again, one line would do it. We can see quite clear that we were trending higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and higher highs. Now, break of structure, looking for price then to come back into the order block that created that break of structure. Beautifully it happened. So I wasn't quite convinced just that, because first thing Monday morning, not that I'm not comfortable, but particularly because I don't usually trade this early in the morning. As you guys all know, I'm a London session trader, or post London and onwards. I was a little bit hesitant. Not really sure why. It's just candlesticks and my illustrations, but I see a little bit tiny more of confidence before I was ready to take the US dollar CAD short. But I hope you guys can see how it's not just a position being executed, it is structure. So we've tapped into that 15-minute order block. We then had a bearish engulfing candle to the downside, and that left us beautifully with another 15-minute order block. So as soon as that happened, I was seeking to understand, well, have we really done anything from here? In my opinion, we hadn't. So then I was waiting to see if we would come back up into it. What I mean by have we done anything, I'd have ideally liked for price to take out these lows, then pull back into the order block, and then I would revert to my cross pair to take the position. So that's my thought process on the DXY. Now, US dollar CAD then is pretty much exactly the same. However, we don't have a 4-hour order block where we were trading from. What we have was a session high. So using the 15-minute time frame, we had a very similar setup on US dollar CAD. If you stay with me, here's a low in the market, lower high, failed to make a lower low, but the session high is being respected. Lower low created. We then come back up into that session high, and now you can see what we've had. So session highs, we've had this 15-minute order block as a result of this bearish engulfing candle just here being created. But look at the difference now, what we have. One line will do it. Here is a place in the market where price was failing to break and close below. And look exactly what we've had. break, order block selection. As soon as I had the break, it was a sell limit for me and it's triggered. And I should really be now seeking to move that towards break even because my higher time frame analysis, not that I don't like trading session highs, I don't mind it at all, but my higher time frame analysis, which we'll get onto now, is that I do honestly foresee price to move slightly higher into this refined 4-hour order block and then refined 15-minute time frame. Now we can now begin to analyze US dollar CAD from top down rather, higher time frame weekly order block towards the downside. So predominantly I am looking for short positions out of that order block. It would be very difficult for me to take any other, well, a long position whilst we are in this order block, aside from if it's an Asia range position based on 15-minute price action only. Now, when you start to refine this order block down, because of course, as you guys can all see, this order block is far too large for me to take a position from, with a 2,000 pip stop loss or whatever you want to call it. So refine this order block down perfectly in the equilibrium. So the midpoint of that weekly order block, we are nicely within this white order block. That is our daily time frame. I will scoot it over so you guys can see why I'm using that order block. So bear in mind, we're seeking just to refine this area down. And here we are by way of order block as a result of it being the only available daily order block within this area. So of course, when we go to most recent price action and structure, look where we're holding up. It's no surprise to see that the order block is doing the business for us. Now, when we seek to refine all areas down, we can understand just here why we would have a bit of a hold up when we're within a higher time frame point of interest. More often than not, as a result of trending towards the upside into it in this scenario, we are going to have a bit of a range. We're not just going to tap a higher time frame order block and then immediately move towards the downside. We're ranging and we can identify that range very clear. I mean, if you don't see it on the daily, I think it's very evident on the 4-hour time frame. Well, it was at some point. And what we now have is a break out of the range, and I'm understanding to, well, I'm trying to understand that we now have a break. We're now looking for the pullback. We're now looking for the continuation. And now the reasoning why I believe so is look at the EMA performance on the 4-hour time frame. We were respecting the EMA towards the upside. Here is our first clue as we've broken below the EMA, and we've also secondly rather, clearly broken out of my illustration of a range. And as I always say, price action doesn't necessarily have to respect my illustration, but I'll do the best that I can do in order to gain that confluence. So candlesticks are breaking below the range where it's failed to do so prior. Now we've broken also below that 4-hour 50 EMA where we were failing to do so. We were respecting it towards the upside. Here's the low in the market, first of all, created potentially lower high for what we now have as a lower low. So after a lower low, what are we expecting? A lower high for a lower low continuation. Now, the good news is current performance of that 4-hour 50 EMA is that price is now respecting it towards the downside. However, in order for me to take my higher probable position from these highs, well, let's backtrack. Another reason what's given me the confidence to take this short position is as a result of where price action based on that 4-hour 50 EMA is. As you can see, price action has tapped into the EMA once, rejecting it, tapped into the EMA again and rejecting it. We're coming up, we're pushing up into that EMA, and again, we rejected it. Hence why I figured, well, everything aligns with the DXY. It aligns US dollar CAD. It aligns nicely from this session high. Clear structures are being respected on that 15-minute time frame. The only real question that I have to ask myself is, well, why would you not take that position? Despite the time of the position, it just makes complete sense. So I hope that you guys can understand that. And I won't go through all pairs in that degree of detail, but I think that is a good basis for you guys to use the DXY. That is exactly how I'm always using the DXY. It doesn't necessarily need to be a primary for US dollar CAD and the DXY to go short. I'm happy to use the DXY in the same method and take a GU long position, for good example, if the DXY is looking weak. But I think here is a very, very, very nice example of how you can identify the DXY based on higher time frame, refine all areas down, identify structure points, breaks of structure, imbalances, with your order block selection, await price to return back to those order blocks, refine them down again down into the 15-minute time frame. And then if you have a doubt, revert straight back to the pair that you're looking to trade. What's happening? Clearly into the session high, respected the session high perfectly. If we had broken and closed above that session high, it would no longer be a respected session high. For me, we would then have made a higher high. So I would then simply be waiting for price to revert to this position here and take the long position down. So I understand I was granted an opportunity and I was looking to take it. My alert has just about gone off, so I'll be moving that to break even at some point shortly. So there's not too much more to say about that, to be honest. I hope that's crystal clear. And if you're able to unmute yourself, Frank, you'll be able to be the guiding light. If that isn't clear, I'll be happy to go over that again. But that is exactly how I'm trading, boys and girls. So Confluence.
Understood.
Thank you very much, Craig. Confluence, the pair that you're looking to trade, and just execute. If it doesn't make sense, leave it out. And that's, for example, when we start to go through the rest of the pairs today, I'm not going to be looking at all of the pairs because we have a lot of nice looking setups to await for. So there's no need to chase other pairs, just simply await for the setup that makes sense. And for me, this is a position that I wouldn't have minded losing. And that's how comfortable we all have to be with trading, because we will lose in trading, but it's about taking positions that when you journal those positions down, you take your screenshots and you look through your setups and your trades, you have to say, that's a good position. I can't win them all. It's impossible to win them all, but would I be comfortable to look through my history of trading and see that position and say, wow, you know what? I really couldn't have done much better. It was all there for me. So that's a position for today. So if I do go silent for a little bit, it's just because I'm moving this to break even, but I won't do it just yet. We'll move on. So what I'm looking for today, honestly, I do foresee this to be taken out break even. I don't believe that DXY is fully ready to turn around just yet. Granted, it has come into a 4-hour order block. It does look good, but for me, well, I mean, there's every opportunity for price to move short from there. I'll back myself, but I feel like this area up at those highs is a little bit more of a better area just because we're quite low within that higher time frame point of interest. I would expect price to pull back ever so slightly, potentially towards the midpoint of that GAM box, which would identify this higher time frame 4-hour order block. But as I've said, it's a position nevertheless. We move on. If it's break even, I'll be looking to execute a short position on US dollar CAD, but I would need to seek the same degree of confluence on the DXY before doing so, because if US dollar CAD moves higher, we have then broken structures on the lower time frame. So what I would then need to do is, for good example, this is what would happen. We'd now make a new higher high, higher low, higher high, higher low, etc. up into that area. I then need to see the most recent higher low broken, identify an order block that's been left behind as a result of the break, and then I'd look for the short position. So exactly the same, nothing before that. So again, just to emphasize, just because price goes into our points of interest, i.e., price is up into a refined 4-hour order block, it doesn't necessarily mean it's time to execute. I can't stress that enough, everyone. We're into a higher time frame point of interest, but we are bullish going in. So we need to understand, we need to have significant breaks of structures before we then look to execute the position when price then returns. Of course, if you're comfortable to do so, you can set an aggressive position. An aggressive position is a position anytime the most recent structure point hasn't been broken. So if we can identify a higher low within the uptrend, and we're not going to be waiting for this break of structure, we're simply going to be setting a limit order or looking for an instant execution from here, that's fine to do so. But we all must understand that that is an aggressive position, and most to date, i.e., 15-minute structures are printing bullish. So we run the absolute risk of price pushing us into profits, but that could just be creating a higher low for a higher high continuation. So if you're struggling with consistency and you literally just need a fixed plan, then simply wait. We can all understand price action in its most basic format: higher high, higher low, higher high. I'm happy to draw it again for you guys. Higher, high, higher, low, higher, low, excuse me, higher, low, higher, high. So of course, if that's the higher low, where has the higher high been broken? Or excuse me, where has the higher high been created from? Here. So therefore, if you're going to be taking an aggressive position, we must be break even by the point of which price action is looking to create that move from. If you're not, and you're just going to anticipate that, you're running the absolute risk. Now we're guessing. We don't guess in trading. We use the facts that are already printed in front of us. We create a plan and we continue to roll with that plan until we're proven otherwise. So until this is broken, understand that we are bullish on the lower time frames, despite price moving into our higher time frame point of interest and refined area. So I hope that's crystal clear, everyone, because I do remember, well, we won't go there, but just understand that would be an aggressive position if you don't wait. So I think I've spoken to death about DXY and US dollar CAD, but that's why I figured to start these calls earlier, which gives me more time just to not have to rush through these calls and give you guys all of the insights that I'm using. So that's US dollar CAD active. That's what I'd be looking for US dollar CAD in terms of a short scenario. And we've spoken about the DXY. So GBP US dollar will start from we'll start from the daily time frame. Looks good. So daily time frame. Why do I like it? Well, daily order block. Looking to refine that area down. Where are we? We're towards the lows now. Do I have enough range? Yeah, we can talk about the long position. I like the long position a little bit. I'd much prefer to take a short from these highs, but it is what it is. We're not there at the moment. Now, the reason why I like the long position now is, although we don't have any refined areas on the daily time frame, so we're starting our confluence from the 4 hour. We'll talk about it first and foremost. Daily time frame, we're at that daily 50 MA. So for the day, for the rest of today's trading business, we're expecting price action to reject that daily time frame, excuse me, daily 50 MA towards the upside. I understand it feels like it could be a little bit far-fetched, but that's the strategy. We were failing to break above that EMA and price was rejecting. So now we have broken above the EMA. We're retesting the EMA, bottom right-hand chart daily time frame. Now, what am I expecting? Based on the facts, I have every expectation that price at some point today is going to want to reject that daily 50 MA towards the upside. Now I need to find the confirmation and confluence to support my thought process, and that's by way of the 4 hour time frame. So what's evident on the 4 hour time frame? What are we doing? In the immediacy, higher high, higher low, higher high created. So what am I expecting now? A higher low. So is there any surprise that price is moving short currently as the 4 hour time frame is seeking to create a higher low followed by a higher high continuation? That's exactly it. It's nothing more than that, team. So once we've identified a higher high in the market, can we then identify where that higher high has taken place from? Here is the lowest 4 hour order block. Again, the confluence is beautiful. Daily 50 MA, 4 hour 50 MA. I'm not really concerned about the weekly 50 MA for the start of the week because we have the rest of the 5 trading days available to reject that weekly 50 MA, but it's there nevertheless. Again, I don't know where price is going to look to turn around based on the fact we have what do we have 16 hours left of that daily candle, but we already can see the liquidity by way of our order block selection. So once we then look to refine this 4 hour order block down, here is where we are on the 15-minute time frame. All the same stuff, everyone. Nothing changes on a daily basis. It's all the same. Now, 15-minute time frame, refined area, again, equilibrium of this 4 hour order block, the midpoint. We can see the bold green line. Here is our 15-minute order block. Why using that 15-minute order block, Charles? Well, first and foremost, it's the only 15-minute order block that's available. What I do like to see is this 15-minute order block was created. Price tapped into it just here on the top left-hand chart, 15-minute time frame, respected, moved towards the upside. So again, with the facts that I'm seeing in the market, I'm understanding that, so we moved up, high low, we moved up, order block selection. Price is still available, hasn't tapped this 15-minute order block just yet. So when price comes back and taps this 15-minute order block, what's my expectation? It's not guesswork, it's already happened. So I'm expecting price want to come back down into this 15-minute order block. Again, it doesn't mean immediate position. What it means is I'm going to have to check the DXY from where the DXY is at this particular point in time. And this is also why I don't believe that I could be in well, it's a good trade at the moment, but I believe the DXY could move slightly higher. Why could the DXY move slightly higher? Well, because currently I'm not in a position to take GBP US dollar long. So if I have the understanding that GU should move slightly lower, that's telling me that the DXY potentially should move slightly higher. If the DXY moves slightly higher, we just revert back to the DXY just so I can give you all the information. The DXY, there are two areas where the DXY could move higher. I could be taken out of this trade break even and price just return back up into this 15-minute order block. There's nothing left there available, probably on the lower time frames. Or if the DXY wants to move even further, it could be into this this 4-hour order block. Then I'll be waiting for my confirmation break of structure and I'll take the position. On the DXY short, however, what that would mean for me on GBP US dollar long is that I would wait for the DXY to come in, i.e., GU's coming in, wait for price action to break its, wait for structure to be broken. Probably not to that degree, but certainly the most recent, what would that be? Lower high broken towards the upside, creating a high, higher low for the higher high continuation. And I think that would be a lovely looking trade. Why? We've got the confluence from the daily rejecting the 50 EMA, 4-hour order block, 4-hour 50 EMA towards the highs. Price action, we just need to see that broken because 15-minute time frame for today is looking slightly bearish, as particularly when price looks to come down into that area. So we're just going to have to wait. Doesn't mean position needs to be executed today. It's one that we have in our armory. It looks good for the week, for the days ahead. We're just going to sit, be patient, and identify that break of structure when it occurs. Again, the same applies. If you want to take that aggressive, you can indeed, but understand first in the trade, first person to manage the position. And if you're taking out break even, in the immediacy without price then breaking structure to the high, it doesn't mean instant execution. Again, it's up to you, but this is how I'm trading. I'll take this to town just quickly. So if price comes in and I take an immediate position without price action breaking structures on the way down. So let me draw it correctly. Lower low, lower high, lower low, lower high, lower low, lower high, and I enter straight away. Where is my structure point? The area that created the most recent low in the market, I need to wait for price to break. So you need to be going break even by the area in which you're expecting a potential rejection from. We must use the facts. So if that isn't broken, you cannot then anticipate that. If it isn't broken, you must go break even. And if price rejects that area and then comes back down, takes you out break even, there's no license to take a re-entry. For me personally, you're able to do what you want, guys. This is not signals, it's just how I'm trading. There is no right to take that immediately because all what's happened is you're going to be looking to take a long position as price has tapped the imbalance on the way back down. So I would always stress, just wait. I don't really understand. Well, I get the rush. People are doing funding challenges. People want to make money. But we're in this for the long term. I mean, 10 years ago, I wouldn't foresee myself being trading for 10 years, but time flies. And by the time you turn around twice, you've been messing around in trading and you're wondering why we're not getting the results. And it's just simple. We're not waiting. It's a long game. It's a long-term investment. If you've got a couple of £100,000 in the bank, that's a long-term investment, making a couple of percent a month or even a couple of percent a year. And that's just the facts of it. So we have the ability to make a couple of percent a day, but let's just all relax with it. Let's just wait for our breaks of structure, understand what we're doing, have price come back down, and take a very comfortable position with no stress. And once you've done this and you journal those positions, what more can you say? If you take a loss, I mean, I'm sorry. We've got to take some positions at some point in time, and losing is part of the game, but we want to take good losses or great losses, not shit losses, right? Sorry for my language, but it's one of those that I'm quite passionate about. So, GU, that's the order of play today. Sorry to go on to town, but it's good to explain. UJ. Okay, another reason why I don't believe US dollar CAD that I'm in. So I'm always analyzing the positions that I'm in. Yes, I'm in a short position, but I still think DXY can move higher because all the pairs that I'm looking at where I would want to trade US dollar short, they're just not ready. So I understand that I'm early into a US dollar CAD pair. And what's the first thing I've said today? I'm going to need to manage that towards break even because I'm not going to just identify that, okay, well, yep, US dollar CAD look good, DXY looks good, but I'm not going to manage that towards break even. Let's go for a home run. If I want to trade US dollar CAD, excuse me, UJ shorts and GU longs, I'm not ready because higher time frame. In terms of, let's start with the daily time. In fact, even the weekly order block looking for price to come out short. Refine that weekly order block down. Here we are within the daily order block. Why am I looking at daily order block? Well, it's difficult to say. We are parabolically bullish. However, at some point, like I've mentioned before, we must seek to identify that at some point in time, we have broken structures to the downside intraday wise. And that's by way of this bearish engulfing daily candle. At some point in time, that daily candle printing with such bearishness has taken out price action and structure. So what I'm calling this is a low, lower high. Do I have an order block to refine? Yes, I do. So therefore, I'm going to put it on the chart and refine it. Now, when I'm refining that order block down, here we are on the 4-hour time frame. Order blocks in green for the 4-hour, and we can see a couple of options here. We've got session highs right up at the top, where it must be said that daily engulfing candle to the downside is this movement here. And that has most certainly broken structure points on that 4-hour time frame. So then we look to identify, select that order block, and look what has happened. We've come straight back in, rejected it to the downside. So on the way down, this order block is still valid as a result of price not breaking above it and closing above it. However, price has moved on since then. We haven't made consistent lows, but on the way down to potentially making those lows, we have left an order block behind. So this is the first order block that's been left behind that's available. So I'm going to highlight it. Then I'm going to refine it down and go to the 15-minute time frame to see if that makes sense. Well, would you look at that? Beautifully, we can see that price action can move towards the upside. That's fair to say. And then look at this. We've broken structures to the downside. Can I identify where that break of structure here, breaking structures to the left, has taken place? I absolutely can. That's a 15-minute order block. So when I look to bring that larger for us all to have a good look, here we are, 15-minute order block. Therefore, I don't believe we're quite ready yet. Despite price may well look nice on the DXY, this 15-minute order block is still very much so available. So I've got my alert. I'll move it higher so I don't get tempted. But that's my play today. I'm looking to short US dollar JPY from this 15-minute order block. Again, can I be aggressive? I could. Am I going to be? Probably not. So I'm going to wait for price to print towards the upside. Wait for that higher low to be taken out. Leave me an order block behind. Now I'm trading with 15-minute structure. Now I'm trading using the daily rejection. Now I'm also trading using the rejection of the 4-hour time frame. The only caveat to that is by the time price gets there, it's more than likely that the 4-hour candle has closed bullish above that 4-hour 50 MA. Therefore, what's my expectation? My expectation then is that here is now my target. Do I have range? I've got good enough range, I can see, so long as my stop loss makes sense. So here's something similar to what I do, US dollar JPY, probably a max of 20 pips if it needs it. Probably not, to be honest. Do I have the range? Yes, I do. I can at least get towards break even. That's my expectation. So I'll probably be break even by that 4-hour 50 MA. And yeah, I do have the expectation that price could well reject that 4-hour 50 MA and move back towards the upside. However, by the time price rejects that 4-hour 50 MA, what we're going to have? We're going to have more reason to take a position again because we would have significant breaks of structure on the 15. And we hope that once price breaks those lows, even if we're taking out break even, now we have right to re-enter that position because we have moved now. We're now trading alongside 15-minute price action and structure. So I hope that makes sense. And that's that really for UJ. I like UJ a lot. Again, it's one of those positions that I would journal to say is a good trade. Probably at this stage, not a great trade because I have this area up at those highs and I would like my range to be a little bit larger towards that 4-hour 50 MA. So I'm not just managing to break even, I'm actually taking profits at those areas. But nevertheless, it looks okay. So that's up there. UJ, definitely like that. Alerts are set. And as I've said, there's all potential for that to move back up towards those highs. We've got that 4-hour order block. However, there isn't an area. So what I'm going to need to see when price goes up into that area is not, in actual fact, I'd be more aggressive here. I'll be quite honest. So here's the difference. When you've got two areas, look at the degree of criteria that I'm going to be looking for. Breaks of structure. When I'm up at those highs, right up at the highs of that weekly order block, I can't really do too much wrong. I'm going to need to wait for something, of course, but if I'm wrong from these highs, then I am just wrong. Of course, if you're struggling with consistency, wait for this always. However, what I'm going to be doing up at these highs, it's more than likely that I'm going to wait for a bearish engulfing 15-minute candle. So this is me being quite aggressive. With that bearish 15-minute engulfing candle, that will certainly, take my word for it, it will break structure on the 1 minute and likely on the 5 minute only if it's engulfing. When it's engulfing, then I'll use my order block selection on the lower time frames, probably the 5 minute or the 1 minute. And what this bearish engulfing candle will indeed do is break structures to the lower time frame. So I have confluence now to take that position. I'm still waiting for this. It's exactly the same, everybody, but it's on a lower time frame. And I'll look for that short position down. So that would be me being aggressive because this bearish engulfing candle may not, well, will not, in fact, break 15-minute structures. That's the difference. I will be aggressive, but it's a bearish engulfing 15, which will break 1 or 5 minute structure points just like this, but it is still an aggressive position, meaning that I still must manage that position with aggressiveness, with aggression, I should say. So that's my order of play. I think that's two very good, nice looking setups, and that there are two separate entry criteria. So I'll rattle through these now, guys. So that's pretty much the strategy of the day. And EU. So with that said, I mean, there's a good selection already on there for us to be nice and patient with. EU, let's have a good look. To be honest, EU is not really up there for me, I'll be honest. And the reason for that is I think we're just ranging on that 4 hour time frame. With that said as well, on the weekly and the daily, we don't really have any confluence at all to be looking for positions. I mean, if I really squeeze it, I could put this order block in like so, refine that area down, but more than likely we're just going to be still within here. So when I'm in doubt, the first thing I'm doing is just heading straight towards that 4 hour time frame where I like to identify price action and structure. The reason why I don't really like this so much is there is a bit of conflict. If we say here's the low created in the market, so that means here's the key structure point, the area that created the most recent low. However, in the immediacy, we're stepping up and we're no longer respecting that 4 hour 50 EMA. We've actually broken above it. However, the reason why now I'm not comfortable is look, we're just kind of breaking below, closing below, breaking above, closing above, breaking below, closing below, and so on and so forth. Now, if I was to superimpose that on a clear chart, most recent price action, I can't really define any clear highs, any clear lows. I'm just doing something like that. Don't mind trading ranges, but why do I need to today? GU's looking powerful, UJ's looking powerful, and US dollar CAD is looking powerful. So I'll go over it quickly, but it is just a range. And with a range, I need to see structure points broken. It's as simple as that. And with this gap, it's quite difficult now because I would say if this was just structure going, let's say low like that, then of course it would be very easy for me to say, right, here's an imbalance in the opposite direction where price has made a low from. So expecting this type of movement, if my mouse is going to load. So then if price breaks up, pulls back, then I'll take the long position up to fill the range. Because we have the gap, it's not difficult, but that's exactly what I'm going to need to wait for. I'm going to need, unfortunately, the confluence of the gap fill. I need it to actually be filled to take that long position. So that's all what I'm waiting for on EU. Price needs to come into my 15-minute order block because I've done the analysis. So why would I not respect it? Even if price moves up towards those highs and breaks from wherever it is, I need price to return back to this. If it doesn't return back to this, it's no trade. Simple as that. And as you can see, when I zoom out on that 15-minute time frame, that doesn't look like clear price action structure. Or correct me if I'm wrong. At a later point, feel free to message me if you feel like you can identify clear highs and clear lows in this 15-minute price action, in addition, in this 4 hour time frame, in addition, in this daily time frame. There's not too much there. So why would we continue to go over a pair that just doesn't look fantastic, right? But with that said, if nothing else materializes and EU gives us a beautiful break of structure to the highs, rolls back, and I look for a 1 minute break of structure down at these lows, head to the DXY is in a position where it looks as if it's going to move towards the downside, then my gosh, I'm going to be looking to take that long position absolutely. But until there's nothing else available, and until we have this break of structure, EU for me gets, we'll give it a red. Why would we force it? AUD US dollar. I think this is a pair that I like. Let's double check. Yeah, considering that's on there already. So hard time from analysis, weekly order block. Why am I using that weekly order block? Can I identify structures? Well, first and foremost, I don't usually seek to identify price action structure on a higher time frame, but when it's obvious like this, I'm using it. There's a high created. Where was that high created from? Here's the high low. Is there an order block there that I can look to manipulate and refine down? I absolutely can. Price action is in that area now. In addition to that, we're supporting long with that weekly 50 MA where look at the performance, price is respecting towards the upside. So if price wants to gravitate back down towards these lows, my expectation is rejection. I don't know where it's going to reject to. However, my expectation is bullish. Therefore, it's down to me now to refine that weekly order block down and understand, can I look for a long position? Now, within that weekly order block, look where we are on the daily time frame. I'll make it smaller for you guys to identify that break of structure even clearer. Just look at that. High, coming back to the order block that created the high. Now it's down for us to wait and identify our setup to seek when we're ready to take that long position. So we are trading out of weekly, out of daily. We have the support now also. Let's have a look at the 4-hour time frame. By the no, 4-hour 50 EMA has been, most recent candle closed below it. So as we currently speak, if price comes back down, here is our target. So what I'd like to see is a 4-hour candle, hopefully at some stage, break and close above. Once we then have that break and close above, the next 4-hour candle that opens here, if it's to come back down, I'm then going to expect a rejection to the upside and hope, well, not hope, use the facts of the matter that we've closed above the 4-hour 50 MA with this candle. This next candle should then also close and reject that 4-hour 50 MA to the upside, and we'd have a 4-hour candle formation that looks similar to this. Now, 4-hour order block refined within that daily time frame. The only, well, there isn't any available, but I'm reusing the session lows and I'm getting that confirmation on Confluence by way of the 15-minute time frame. I want the 15-minute time frame to tell me why I should reuse this 4-hour order block. Look at what I've highlighted. We have a clear break of structure. Therefore, it's down to us. It's the same thing over and over and over again, guys. Break of structure. Where did the break of structure occur from? I want to identify that 15-minute order block refined within the area of the 4-hour time frame, 4-hour order block, excuse me. Down at these lows, 15-minute order block, it's there, it's waiting for us. Therefore, why else would we do anything else aside from wait for price to hit our alert, wait for a lower time frame break of structure, or wait for your 15-minute shift on the chart, use the identification of the DXY. So if AUD US dollar, if we're seeking that to go towards the upside, what are we going to be needing to see coming out of the DXY? Identification of weakness of the DXY that's going to give us the confidence that Aussie dollar is strong against it. So that's what I'm looking for. I'm not looking for anything else. I think that's clear as day. It's all there waiting for us. There's nothing else to do, unfortunately. So that's a 15-minute order block down at those lows. Again, I'll quickly go over how I'd be looking to take that. So first and foremost, you could take it as a limit order if you so please. I wouldn't suggest it because there is another 15-minute area down at the lows. And if you're able to see, just monitor your chart, even if you're working full time, when your alert goes off, that's just your indication that price is in the area. However, what then I used to do is then have the alert. Once it's gone off, just slide it higher. Once you slide it higher and the alert goes off, you can say, right, price has now moved away from the order block that I am looking to buy from. Then you understand, well, on the way down, sorry, I've drawn that quite poorly. On the way down, so we're doing lower lows, lower highs, lower lows, lower highs, and lower lows. Price comes in, hits your alert. You then move your alert towards the imbalance in the opposite direction, i.e., the lower high area. Once the alert goes off again, we've broken structure. Simple. Move your alert back down to the imbalance now that you want to take a position from. Simple as that. When that alert goes off, or even as soon as that happens, I'd be looking to take a long position. It's exactly the same as what we've explained on all of the other pairs. We change nothing over and over and over again. So that's how with one alert, you can manage trading. So there are really no excuses unless, I mean, to be honest, I have the main excuse, unless you guys are also pilots and I don't really get the decision whether or not the Wi-Fi is switched on or not. That's just down to who I'm flying. If they want to pay for it, if they want to pay for it, then I can use it. So I don't always have the ability to check my charts. However, you guys are working in offices or you're working outdoors, or even if you're not really able to open charts where you're working from, a quick toilet break when your alert goes off, and then you can just slide it straight back down and say, okay, as soon as that alert goes off, or as soon as this higher alert goes off, I've broken structure. So you don't even need another alert because your only position is going to be from here. Just set your buy limit order, and then your other alert, if you want, can be towards where you want to manage your position by. And at this stage, my alert would be towards that 4-hour 50 MA. So that's really how, you don't need to be, in inverted commas, a full-time trader to be a full-time trader. And, I understand the pull and the rush, but honestly, it really is. It's a marathon, guys. It's as slow as you can take it. For example, just to wrap it on finally, and I'll wrap up. I've been on vacation quite a lot, but just because I wasn't posting charts, it doesn't mean I wasn't trading. I was just waiting for the most probable setups, enjoying the beach, enjoying the pool. When the alert went off, opened my phone, and that's trading. If I didn't have an alert go off, I wasn't trading, and there wasn't too much available, so I wasn't investing. Don't get caught up in the bubble of I must be a trader. We're just investing. When you're sending money to the bank for them to invest it for you, you're probably not checking your investments every day or going to the bank every day or going on the app every day because you're just investing. This is exactly the same. We need to come away from I'm investing daily, I need to see results daily, I need to take trades daily. We just need to see high probable setups, await for your criterias, breaks of structure, use the alerts. I mean, I don't even have the highest level of trading view on here. I mean, I've got 99 alerts set somewhere, but you only really need one. Take my word for it. So that's AU looking for longs coming out of the area. I won't go over shorts because I won't be shorting until price comes up here. And I'm very interested in the longs, to be quite honest. So we'll see how that gets on. GBP CAD. So to be honest, there are a lot to go over, team, already, but we'll have a look at GCAD. In fact, no, we won't. I think that's probably more than enough because GCAD, I don't want to encourage reversal types of trading because look at the weekly, bullish. Look at the daily, bullish. We have no real criteria on any of these time frames to look for a short position. We don't have significant breaks of structure, in my opinion, just yet to even say 4-hour bearish. It's just quite difficult to identify. When it's difficult to identify, why am I going to try and trade that position? Again, revert to what they're doing in the banks. If there is a position that they feel is a risky position and you've told the bank only invest in low risk positions, you wouldn't expect them to be now trading GBP CAD. You'd expect them to be shorting UCAD, waiting for a potential long on GU and everything that we've gone over. So if you're not expecting professionals to do this, or i.e. speculate on a pair that doesn't really look so clean, why on earth are we looking to do it? So I'm not really convinced just yet for long positions or shorts. Well, I mean, longs, I really would want a long from down here. I mean, we could look to force this, which force being the key word that we already shouldn't be looking at that. But that 4-hour order block, all what that's done is give me the confirmation that this 15-minute order block, when an alert goes off, I should probably be having a look based on the overall structure and pattern of what's going on. Bullishness weekly, bullishness daily, bullishness 4-hour. I should really be looking for long positions. So this 4-hour order block is supported to the upside by way of this 4-hour 50 EMA. So when price comes back down to that 4-hour 50 EMA, I am expecting rejection at some points down for us to find liquidity beyond it. So the 4-hour candle, I'd expect to start pushing down into that 4-hour order block. Similarly, this is what the candlesticks are going to be looking like, drawn to exaggeration, but that's what I'd be expecting at some point. Then on the way down, because we were so parabolically bullish, I do have a doubt in my mind whether or not we are going to continue bullish. And actually, this break of the 4-hour 50 EMA is a bit of a clue. But again, so I recognize how I could short this, but I wouldn't want to encourage it. So if I'm not going to encourage it, why should I do it also? You see what I mean? So we've got conflicts. We've got this break of the 50 EMA, but no, in addition to that break of the 50 EMA, if this was the high and this was the higher low, what would we be expecting? We'd be expecting a higher high. What did we not get? We didn't get the higher high. We got an equal high, and in fact, this could now be the low for the lower high for the lower low continuation. Now, because I have two conflicting doubts, basically. So, well, you're only ever 50-50. So the fact that I have doubts anyway means that I should probably just sit it out because I can understand why I could take a long, but I could also understand why I could also take a short based on the clues and the confluence that we have. So what I'm going to do for now is just wait for price action to develop. And then when price action has developed, I'll go over that pair if it's something that I feel that I'm going to be looking to trade for the day. And that's exactly the same on GJ. I don't even think I've marked GJ up for that reason again. When you have such, and in fact, my primary pairs, as you guys know, GU, EU, AU, and UCAD. So when those pairs are performing, I see no reason really to speculate on other pairs. So I hope that's sufficient enough for you guys. I mean, if you do have pairs that you want me to go over, it's my pleasure to mark a pair up. It won't take me more than 5 minutes. But for me personally, for the day, I think that's more than enough to be looking to invest upon. Frank, you're the only one present, so if you do have any questions, my friend, feel free to come up. But I appreciate your attendance.
Am I the only one present?
Sorry?
Was I the only one present?
Yeah, you was, in fact.
Oh, okay.
Yeah,
Um,
only one today, but I'll get it recorded and I'll be sending it into the group chat for those that are a little bit sleepy to watch before London opens.
okay. Um, can we have a bit of a chat, or is this being recorded now?
Yeah, I can turn the recording off and we can go through
Okay,
it. 2 seconds there.
sure.
So everyone, good luck in your trading day and you'll hear from me at some point throughout the day. Take good care. All the best. Just a sec there, Frank.